Good morning. Good morning. Buenos dias. Happy Tuesday, everybody. Good morning. Good morning. I'm not gonna wait a few minutes. I'm gonna just go. so, good morning. This is Tamaya Robles. Welcome to Coast Podcast. I am the owner and okay, let me start that over because that's not the right name of the podcast. Welcome to Coast Credit Podcast. This is Tamaya Robles. I am the owner of Fix My Credit Now E50.com. I am a credit repair expert, among other things. Welcome, welcome. So, got that out the way. So good morning. I'm gonna try to keep this live pretty short. I have to prepare for tomorrow's podcast, which is at 5 p.m. Pacific Standard Time. We got to talk about the student loan thing. Good morning, where we got to dive deeper into this student loan thing. What the Department of Education has released. I did a little bit of research on it. I did some comparisons, and the IDR that they're pushing out now compared to the IDRs that have already been in effect for probably over 20, 30 years. Um, you guys need to hear the truth about what's going on. I mean, it's nothing major, but you need to know what the difference is and whether or not you need to sign up for it. But there's other options. So we're going to go into all that. But tomorrow, in the meantime, right now, we're going to talk about credit and getting pre approved for a mortgage. If anybody has any questions or wants to hop on, if you're a lender that I'm familiar with or from my Facebook group that wants to hop on, you can. But I'm going into this again. I'm already warning y'all about um what's happening in October. So I got some clarification. It's not necessarily October. It's whenever you started your forbearance. But a lot of people started it during the pandemic and took a specific forbearance to try to prevent foreclosure. Okay. And that is ending. Okay. That for those that went that route, that's ending. And there's people that just simply didn't pay or save up to save their house. So if you are in danger of getting foreclosure or foreclosed on, just let me know. I have a woman that can walk you through it. I'm not in the industry. I keep telling ya, but I want to make sure I'm saying it correctly. So I did I did write it down, but I think it's mortgage modification if I'm not mistaken. But she'll help you with that. So if you need help, let me know. Whether this has anything to do with COVID or not. So as far as credit is concerned, there's so many changes, so many changes. Things are different now. Data points have changed now. What the banks are looking for is different now. You got to have more than a high credit score. You can't walk through these doors anymore like I have a great credit score and I want to be approved for a house today. It doesn't work like that. I just looked at somebody who had a really good credit score just now, and there's some blemishes on his credit report that may potentially prevent him from being approved for a house. So, yeah. First things first, I personally recommend that you speak to a lender. That's just my recommendation, but that's based off of my personal experience as well. Have a lender pull your credit report. And from when I purchased my house till now, lenders they changed even when it comes to pulling your credit report. Some lenders don't need to do a hard pull. They can you got some lenders that can do a soft pull and then tell you whether or not you're pre-qualified for a home. And if you're not pre-qualified, they can tell you right then and there what's wrong with your credit. Okay. So that's one way. I prefer to go that way because you're going to use that lender either way, or you might use that lender to get pre-approved for a home. So they're already in your business. You already filled out an application with them. You already they already checked your credit. They already did the DTI and all that. So you already have an idea or a game plan moving forward. So that's why I recommend it. And then if it's a credit issue that they want fixed, then you can come to me. I like to talk to the lender directly. I like to talk to all parties in the beginning, but have ongoing communication with the mortgage lender. They're the ones that usually check in. They're the ones that's usually, sorry about that. They're the ones that's usually asking for updates all the time. Sometimes they ask through the customer, and I don't really care about that because the customer can get confused. So I like to have direct conversations with the lender. We both know what we're looking for and what needs to be done, and the customer is more just emotional about everything and confuses things. And then, I fix your credit. Once I'm done, I fix whatever the mortgage lender says or what I see in addition, and then I send you back over to the mortgage lender. And then you're approved if it's just a credit thing. If it's other things like DTI, things like that, like, your lender will explain that to you. Now, if you don't go through a lender, a lot of people don't go through a lender either, which is also fine. I mean, I'm so used to dealing with you guys. I know what to do and how to handle it and referring you to certain people, whatever. So, if you know your credit is messed up or you want me to check and see if your credit is messed up, that's fine. Hit me up, schedule a free consultation, go under Fix My Credit Now, 850.com, and schedule your 30-minute consultation. I will be sending you a link to Smart Credit. Okay. I am partnered with Smart Credit. So I need you to look at your 3B report. Your 3B means three credit bureaus. I need to look in depth at your credit report, and you do have to pay for that. Okay. I am running a summer special where you can sign up for $1 for 7 days. And then it takes me 3 minutes to look at a credit report, even if it's messy. But I will send you a link. So while we're having our consultation, I can discuss with you what I see and we can go over it, and then move forward. All right. Now, again, I usually know if you're trying to get a home, I usually know what to remove. Okay. What needs to be worked on and things like that. So you don't have to worry about it. Your credit report is never as bad as you think it is. And yes, I can give that blanketed statement. I can give that blanketed statement because I've seen enough of them. Um, the worst credit report I've seen, it was years ago and it was really messed up, but it was doable, it was fixable. So your credit report is never as bad as you think it is. Now, with a lot of mortgage lenders, what they're looking for is they don't want open collection accounts showing a balance, right? What that shows is you have an open debt, you owe somebody money actively, you're actively owing someone money, and you weren't responsible for it, so it went into collections. And the balance part is showing how much that debt was worth. Okay. That's why they don't want that on your credit report because it affects your debt to income ratio. So that's where credit repair comes in. And that's when it's pretty important. There's companies that don't care if it's in collections or that you have a charge off. They just don't want it to show it as open. And then they don't want it to show a balance. The reason that's a problem with your credit is technically anything that's in collection should never be reporting as open. It's a violation of your rights under the FCRA. It should not report that way. All collections should be closed and zeroed out. Okay. And if it's going to a collection agency, the debt is sold. So that's why there should be no balance. And unfortunately, Um, there's companies that are mad shady and they're going to report things however they want to report it, and that is negatively impacting the consumer, you guys. Okay. So credit repair. That's why you need the credit repair. Mortgage companies typically don't care for a whole lot of inquiries. So most of my customers, they have a ton of inquiries when they purchase cars, whether it's for themselves or they co-sign for someone. So when you go to a car dealership, obviously they're gonna run your social security through like the ringer. So you might go in just once and say, "Hey, I'm interested in this car." They'll be like, "Okay, great. Sit right here." And then they go in the back and then they ring your social through like 15 companies. That's not unusual, but it is easy to remove. You could even remove it yourself fairly quickly. Inquiries within 30 days can be deleted pretty quickly if even if you just call the credit bureau and say, "Listen, I was in a process of shopping for a car." They know what that means. They know that what that entails. When you're shopping for anything, um, you're looking for like credit. It's going to the companies are constantly going to obviously run your social security number, so you can call the credit bureaus and say that inquiries are not supposed to be connected to an account where you don't owe money to, especially during the 30 days. So that's why it's easy to take it off. Inquiry is just that they're inquiring to see if your debt if you're able to be approved. So if you got like 10 of them in your car shop and they understand that. They understand that. And they can remove it. So mortgage companies typically don't care for a whole bunch of inquiries because it looks like you're begging. And I did a video on that too. It's not, just not mortgage companies, anybody you're trying to get a loan from, credit card companies, if you're trying to get a car, they don't like it. So that part. What else? So if you have we'll talk about child support. So child support is like any other debt. So if you got missed payments, if it's in collections or whatever, charge off. like I they don't typically do that, but they will put blemishes on your child support. They will report if you're missing payments. And if you've missed payments for a long time, that shows up on your credit report. What I can do is remove the child support completely off of your credit report. So if it's not on your credit report, then your score should increase. When anyone is looking at your credit report, they don't see the debt. All right. It doesn't mean you don't owe child support. It just means it's not showing up on your credit report. It still doesn't mean that technically you're not late or didn't miss payments. It just means it's not showing up on your credit report. And that's it, right? But you may need that. I have a client now who has that child support on his credit report. Now, I did one of my mortgage lenders that I am working with. They did tell me that if there's a client that already paid off their child support and it's showing that way, or they needed to show that, there's a special form that I can use and send it to the court system, and within 30 days, I think it's not even 30 days, I think they can immediately, once they receive the request, they can immediately remove it. So that's super cool. But again, if you're trying to get a mortgage and you got this child support debt and it's mad ugly, just get it deleted. Okay. No need for a long conversation. And I can see that in a consultation. I can tell you, like, "Oh, son, listen, you gotta get this off." Right? Like, it's mad crazy. So there's that. And then let's see, student loans. We're gonna have a whole student loan week or something because the student loan crap is crazy. But student loans, I have to get a mortgage lender or a broker or whatever to explain. They get into it on another level that I'm not too familiar with, but I have sat in a few Zoom classes where they explained how they handle student loans, and they say don't zero your student loans out, and I don't understand it completely. So I'll have somebody here to talk about it and explain it, because I don't know the details. But again, it's a debt. It's a debt. It can affect your income. It can affect your debt to income ratio. I'm always going to be a credit repair specialist at heart. If I see a negative, I'm always going to encourage you to remove it. Except if you're trying to get business credit, or you're trying to build your credit, or you don't have that much credit and the only credit that you did have was a student loan, I don't encourage you to remove that from your credit report. I strongly encourage you to make that negative and turn it into a positive and build off of that as almost like a stepping stool to positive credit, right? So it's like, well, it's mine. That make doesn't I don't understand. That doesn't make sense. Well, again, a lot of you guys are just, you're looking at your debt and you're looking at it from an emotional standpoint. Get over the emotion, just get over the fact, yes, you went to college, you went to grad school, it was mad hard, and you gave them your blood, sweat, and tears, and then you got this high bill that you can't pay, and it's going to be stuck with you for the rest of your life. All right, let's cry about it, let's hold hands, let's kumbaya, let's work it the fuck out. Now that we're done with the emotional part, let's take a look at it. Let's fix it. Let's either utilize it for your benefit, or we can remove it from your credit report so you can do things with your credit, whatever. Let's see what we can do about it, right? Maybe we could discharge it in certain situations. Some of y'all could discharge it completely within 30 days. Okay. Anything pertaining to credit repair, not credit repair, I'm sorry, anything pertaining to your student loans, not including credit repair, right? I can handle it and you'll get results in 30 days. I'm not a grand wizard. I know a lot of y'all think I am, and I appreciate that. I really do. But that's why I have a problem with this whole Biden thing or whatever. I'm so looking forward to tomorrow's webinar, but it's just something that they offer, and they've always offered these things. They've always offered a quick 30-day turnaround time for your student loans, and people just don't know it, and it's so messed up because people don't know it. What they did do, also inclusive of that, they don't advertise, or they never advertise it like this. This is the first time that they're advertising the fact that they have income driven repayment plans, forgiveness programs, right? But on top of that, they make it difficult to apply. Okay. They make it difficult to apply. They make it a little confusing. Sometimes you don't know where on the website to look, and it can be frustrating, and it makes you kind of just want to give up. I don't give up though. I'm going to find these things. I found them. And there's so many ways. There's so many ways to get rid of your student loans. There really are. And there's so many ways to lower your student loan payment. Okay. Yes, you can do it yourself. You don't have to pay nobody. Okay. I'm not talking to yeah. I'm not. Let's get over that. I'm not even gonna go back and forth with people that keep saying you don't have to pay for it, you can do it yourself. Do it yourself. Do it yourself. All right, now that we're done, I'm talking to the people that want my help, want me to do it for them. I have ways of, I'm sorry, I keep playing with this microphone because it looks weird on the camera. I'm gonna stop messing with it. But I have ways of in techniques. I have different ways and techniques of lowering your monthly student loan payment, even when you're a high wage earner. Okay, I have ways. I'm gonna just leave it at that. Okay, and that's another thing that you're paying me for. You're paying for my services. You're paying for my time. You're paying for me to use my skills and things like that. What I do is probably going to be much different than how you do it as a civilian, as a regular civilian. So, yeah, but either way, as a regular civilian, there are options, there are ways that you can delete your own student loans. Okay. And we can talk about that. But when it comes to your mortgage, It is looked at as a debt. I'll have a lender explain it and we can go back and forth and y'all can ask them some questions. I had one lender that wanted me to remove a positive student loan, and I was so against it. And it's very hard to move a positive student loan because it's positive. This particular one was literally perfect, and it was difficult for me to get off. I think I did get it off. It just wasn't easy. And I didn't want to do it because I knew what her plans were after purchasing a home, and I just knew that if she kept it on there, it would help her in the future. But they wanted it off. The reason why they wanted it off is because it affected her debt to income ratio. Even though it was positive, it was still a debt, and a debt is not good. So I understand. But for the most part, just talk to your lender. And again, if I see it, I don't do debt to income calculations, but I can pretty get a good vibe or understanding of what needs to be removed and what could potentially hurt your debt to income ratio. So there's that. Repos from personal experience. My first home that I bought, I had two repossessions. I had a voluntary repossession and an involuntary repossession. For the record, there's no difference between the two. They both equally destroy your credit. They are both equally a black eye to your credit. When you're trying to get a loan, if you're trying to get another car, if they see a repo, whether it's voluntary or involuntary, it's a no go. And if they do approve you, they're going to make your interest rate so high. It's pathetic. So mortgage companies don't care about it again unless it's open. It's an open debt that's showing a balance. And mine, that's what both of mine were. So when I initially applied for my first home, that's what um that's what they saw. They saw two open repossessions and they were like, "Oh, we'll see you in a while. Like, good luck with that." And I was like, "Nah, I'm gonna see y'all like in 30 days." 'Cause- so I did what I needed to do. I fixed it and I think it was about 30 days I came back and they were shocked. So, but I got it closed. And sometimes keep in mind when it comes to credit repair while we're disputing, the bureaus were at their mercy, so we're asking them or showing them, "Hey, this account is wrong. These are all the points. Please remove it." Blah blah blah. We're at the mercy of the bureau whether or not they're going to dispute it or delete it or not. So it might take a couple of rounds. But again, we have other ways of not just going to the credit bureau. We have other ways of disputing. So again, if you need your credit repaired, definitely hit me up, schedule a consultation, fixmycreditnow850.com. So I wound up getting my first house with one repossession. So I got them deleted, and then the one just decided to keep it on a particular bureau. And to this day, it might be on there. It's just closed and old and not showing a balance, so it doesn't hurt my credit score. So that part. So yes, you can get a house with a repo. You can get pre-approved for a mortgage with child support. You can get pre-approved for a mortgage with student loan debt. Okay? Your credit report is not as bad as you think it is. Okay? Just let me look at it. Let me as a professional, as the expert, look at your credit report and then I can tell you. You don't tell me. I hate it when customers schedule a consultation with me and they're literally saying, "I already know. I already know." If you already know, then fix it. Fix it, and we don't need to have a conversation because why? You already know. Right? And every person that says they already know, I look at their credit report and I can tell that they don't know shit. Because if they did, it would have been fixed and they would have been pre approved already and they wouldn't be having a conversation with me. Let me look at it. It's never that bad. I've had customers come to me and like, "I know it's bad. This is terrible, blah, blah." I'm like, "Oh no. All you need is a trade line. You just don't have credit." And not having credit, like, don't feel ashamed. If you come to me, you feel embarrassed that you don't have credit. There's no need to feel embarrassed. There's so many ways to increase your credit score very quickly. Actually, my ideal customer is a customer that has no credit or little to no credit, because I know I can slap a trade line on there and skyrocket your credit score to 650 to 750, 800 plus if needed. So don't feel bad about it. There's always help, okay? And I'm here to help. I'm going to get off here. Like I said, I have to prepare for um podcast. Tomorrow, Wednesday, come here, all right, at Coast to Coast Credit Podcast, 5 p.m. Pacific time. Also, when you're scheduling an appointment with me, please understand this is Pacific time, Pacific time, right? So you can schedule it. I'm always up, as you can see. What is it? It's 7:30 our time here. I actually get up 4 a.m. I'm dealing with the East Coast all the time. So when I was on the East Coast, I dealt with the West Coast all the time. So I always had to stay up later than necessary. So I'm used to it. But just understand that this is not East Coast time when you're scheduling consultations with me. So come to the podcast tomorrow. I am going to go over the student loan thing. That wasn't even going to be the topic of discussion. I was going to talk about other things, but man, y'all need to get on the ball. I think it's going to be very concerning. Okay, I got to get off. Businesses are calling. You guys are going to be very upset when you see your credit. What's going to happen to your credit score in October? I'm trying to prepare y'all now, but I have a feeling that nobody cares until they see their credit destroyed. So yeah, I'm gonna get off this thing. It was great. I hope to talk to y'all tomorrow. I'm not gonna do a live in the morning. I'll probably just hop on tomorrow at our usual scheduled time. But in the meantime, you guys have a good one, and I'll talk to you soon. Bye bye.